So if you've been paying any attention to India's economy, you know the story. You've seen the headlines, right? Millions of new investors are just flooding into the markets. Mutual fund assets are going through the roof, and digital investing is just, well, it's the new normal. It's this massive, incredibly visible financial boom. And just to put a number on that, India's mutual fund assets under management, or AUM as it's called, have been growing at a compound rate of over 15% a year. That is a truly staggering pace. It represents this fundamental shift in how people all across India are saving and investing their money. But have you ever stopped to think about what's actually happening behind the scenes? You know, when you tap a button to buy a mutual fund, who processes that? Who keeps track of all the records? Who makes sure that this entire system works flawlessly and securely millions and millions of times every single day? Well, the answer lies with a company that's basically the hidden engine for this entire ecosystem. So to really understand this engine, we first have to appreciate the sheer scale of this investing boom. This isn't just about big numbers. It's about building the foundational plumbing for a modern financial market. So let me introduce you to Kfintech. Now, they might not be a household name you hear every day, but they are the powerful and often invisible tech company that acts as the digital backbone for a huge chunk of India's capital markets. They really are the engine under the hood. Okay, so what in the world does this hidden engine actually do? Let's break down their core business. At its very heart, KFINTECH is what's known as a registrar and transfer agent, or RTA. Just think of them as the official scorekeepers for the financial world. They manage the entire journey for an investor, everything from getting you signed up, to processing your transactions, to making sure everything is perfectly compliant with some pretty complex regulations. They are basically mission control for the big asset managers. Now, what's really interesting here is how their business is put together. You can see that a massive 65% of their money comes from those core mutual fund services. But they're also deeply involved in corporate registry work, managing shareholder records, dividend payouts, that kind of thing. Plus, they handle pension fund administration and other digital solutions. It's a really diversified yet super focused business model. And the scale here, it is just immense. We're talking about a platform that processes over 80 million transactions every single year. To put that into perspective, KFINTECH handles more than 70% of all mutual fund transactions in the entire country. This isn't just a big company. They are a critical piece of the national financial infrastructure. Now, handling that kind of volume and that level of responsibility gives a company a really powerful competitive advantage, or what investors like to call a moat. So what makes KFINTECH so dominant and so hard to compete with? Let's start with this number, 65%. That is their commanding market share in the mutual fund RTI industry. I mean, having a leadership position like that gives them incredible pricing power and some really powerful network effects. And a huge reason that market share is so sticky is the structure of the market itself. It's what you'd call an oligopoly. There are really only a handful of major players who can do this kind of work at this scale. The regulatory hurdles and the sheer amount of tech investment you need, well, they create these massive barriers to entry for anyone who might want to try to compete. So let's break down the 4 deep moats that really protect their business. First up, you've got high switching costs. I mean, it is incredibly complicated and risky for a billion-dollar asset manager to just change their core record keeper. Second, deep regulatory expertise. They are absolute masters of a compliance world that's always changing. Third, their advanced and scalable tech platform. And fourth, those powerful network effects we mentioned. The more people use their platform, the more valuable and efficient it becomes for everybody else. All right, a strong market position is great, but how does that actually show up in the financials? How does all that translate to the bottom line? Let's look at the numbers. Okay, looking at their recent quarterly results, we see a picture of really steady, solid growth. Revenue is up over 10% compared to last year, but the number that really jumps out is that EBITDA margin, almost 44%. That just screams an incredibly efficient and profitable operation. And when you zoom out, the long-term picture is frankly even more impressive. Over the last 5 years, their revenue has grown at a compound rate of nearly 29%. But get this, their profit has grown at an astonishing 48%. That's what we call operational leverage. As their revenue grows, their profits grow even faster because their tech platform can just handle more volume with very little extra cost. It's beautiful. Okay, so they're dominant, they're profitable, and they're growing like crazy. So what's next for this financial infrastructure giant? Well, the company has laid out a pretty clear four-pronged strategy. First, they want to expand their core market share even further. Second, diversify into new high-demand services. Third, expand internationally into these fast-growing markets in Southeast Asia. And fourth, keep innovating with all the next-gen tech, AI, machine learning, blockchain, you name it. Now, of course, no company is perfect. So for a balanced view, let's look at the strengths versus the things you'd want to keep an eye on. The strengths are crystal clear. KFINTECH is a critical infrastructure provider, they're a technology leader, and they have this highly predictable recurring revenue model. On the flip side, the things to monitor include the risk of having too much revenue tied to just a few big clients, the constant need for heavy tech investment, and of course, the ever-present threat of new competition, even if it seems distant now. So when you boil it all down, the big takeaway is this. KFINTECH is seen as a really compelling way to invest in the plumbing of India's growth story. Instead of trying to pick one winning asset manager, this is a bet on the growth of the entire ecosystem. And that leaves us with one final question to think about. As India's markets continue on this incredible journey of digitization and expansion, could the companies that own and operate that essential invisible infrastructure, the digital plumbing, actually turn out to be one of the most strategic investments of all?